Hey there. So today I am here with my lender, Ernest. Ernest Berrigan. He's with iFinance Mortgage, and I thought we would do a little interview, so give you buyers out there some information. How's that sound, Ernest?
It sounds good. I love it.
Awesome. Okay. So I will just jump right in, right? We want to give them the information.
Okay.
So my first question is, how early in the home buying process should a buyer talk to their lender?
I would say very early. As soon as they start to think that this is what they want to do, they need to talk with their lender to find out what they can do, what needs to be addressed, if there is anything that needs to be addressed, if credit needs to be improved, if their income is strong enough, stable enough, if it needs to be documented, whatever things need to be adjusted, get on it right away. That way you have the time to make those adjustments by the time it comes to buying the home.
Okay,
Yeah.
excellent, excellent. So I was just looking over a blog the other day, and one of the things it said is that a lot of buyers don't know what kind of credit score they need to qualify for a loan. So could you speak to that for us?
Yeah, that's a good one. So there's several different loan programs. Each program has different credit criteria. So your typical conventional loan, you need to have at least a 620 credit score to get that. However, if you have a 620 credit score, that's low, and you're probably not going to get the best program. So I encourage my borrowers to strive to get somewhere in the neighborhood of 660, 680. Okay, get the high 600s. Or more, of course. And that's going to get them a better deal for a conventional loan.
Okay.
Now, if they're looking at a government loan, like a VA or an FHA or a USDA, okay, these are government loans, they actually allow lower credit scores. So now if someone has a low credit score, that might be a better option.
Right.
So what I do is I find out where they are, where that person is currently, then where they can get where they are currently, and then what they would need to do to get to the next plateau up. And then they can decide, yes, I have time to make those improvements, or no, the house I want is available now, I need to get it now.
Okay.
So we figure it out based on their situation.
Okay, that goes back to how early you should have talked to a lender so that you can maybe get a better deal.
That's right. Yeah,
Okay.
for sure.
Okay,
Definitely.
excellent. Okay, great, good to know. So leading into my next question, what does it really mean to be fully approved versus pre-approved, right? Because pre-qualified. I guess that there's three. Is there three different
There
stages?
is, yeah.
Okay.
So there is pre-qualification, pre-approval, and final approval. Okay, so pre-qualification is where I would ask you, tell me about your credit, tell me about your income, tell me about the assets you have in the bank, and you just verbally are telling me your situation, and then I can tell you, okay, based on what you're telling me, you would be qualified for X, Y, and Z.
Okay.
But I have no proof. I only have what you're telling me.
Right.
So that's pre-qualification. It gives you an idea, but it doesn't hold a lot of weight.
Mm-hmm.
So that's where documentation comes into play. So now I would say, okay, Kathy, provide me your pay stubs, provide me your documents that prove what you say is accurate. Now I can take a look at these and confirm, okay, you said you made X amount of money per month, but in actuality, it's just a little bit more, or maybe it's a little bit less, whatever it is. Okay, I can calculate it and I have more specifics. You may say, oh, my credit's great. Okay, well, how great is great? So now we can find out exactly what it is. We analyze debts, all these things. We have the documentation. Now you are pre-approved.
Okay.
Okay, now you're pre-approved. You get final approval once everything gets sent to the underwriter. They have a property. They have title. They have all the other little pieces. And once all those things are reviewed and checked off, now you are final approved.
Okay.
Or fully approved, I should say.
Okay.
Yes.
What about, is there something in between where they can get into the underwriter, or do you have to have a full property and package to do that? Is there anything in between the two that would help and make them stronger?
Yes, there is. So not all lenders do this. Some do. We do, where we can send everything but the appraisal and title to the underwriter. They will review all the documentation I just mentioned, and they will sign off on everything that we provide them. So they'll say, yeah, the income is checked, approved.
Okay.
The assets checked, approved. Credit checked, approved. Based on that, now we have a true approval, a conditional approval, if you will.
Okay.
So it's not a full approval, but it's better than a pre-approval. It's a conditional approval. So
Okay.
we're basically saying you are good to go as long as X, Y, and Z. And that's very, very strong, because when you present that to a seller,
Right.
they know this deal is as good as done.
Excellent. Okay.
Yeah.
Yeah. That's important. I think especially in this market.
Oh, yeah.
Or in the past market when things were moving fast. That's
Yeah.
really important then.
Oh, yeah.
Okay.
Well,
All right.
that's also real helpful. I'm glad you mentioned that. It helps us close a deal much quicker.
Oh, right.
Because so many things have been done already. So if I take my borrower and get them conditionally approved, and the only thing I'm waiting on now is the appraisal and title, that can be done in a few days. So now that's the difference between doing a 30-day escrow and maybe a 10-day escrow or 15-day or
Oh,
something
wow.
like that.
Okay.
So now all of a sudden say, whoa, you can get this done so fast.
Right.
So
that
that
could
really,
give them a really leg up there.
For sure. For sure.
Definitely over some other buyers.
yeah, definitely.
Okay. All right. I like that idea. I think I might start calling on that one.
Yeah.
And then what about mistakes? What common mistakes do you see buyers making? We want our buyers out there to have the best chance. And so
Okay.
what should they avoid?
Okay, so there's one thing in terms of credit. I see it many times where people will think, oh, you know what, I want to get rid of these accounts and I'm going to close them out. When you close an account, it's going to negatively impact your credit. So it's okay to pay the account down. It's even okay to pay it off, but don't close it. Leave it open. Same thing if you open an account. Some people say, oh, I want to build my credit, so I'm going to open up some accounts. Well, when you open an account, that negatively impacts your credit temporarily. So I tell people, let's just freeze everything you've done with your credit. Just don't open, don't close, don't do anything. Just make your payments on time. I will direct if it's necessary to maybe pay a little bit more. Okay, we can do that. Another thing that happens is we're in escrow, where everything's going good, and they're feeling confident, and they start shopping for the furniture or their appliances, and all of a sudden they're buying things. Well, that gets affected. That affects their credit, so that can alter things. So no big purchases.
Yeah, no new car.
No new car. Don't just stay away from all of those types of things. So basically, once we've taken that snapshot of their credit situation, let's just try to leave it the way it is.
Gotcha.
They also shouldn't change employment, right? Don't change it. If you're in the middle of, hey, I got a really good offer to take this other job. Well, let's talk first.
Okay.
There are exceptions, but generally speaking, don't change your employment. Again, don't change what's already been approved, because now you got to get reapproved, and sometimes that doesn't go so well.
Okay.
Those are some of the
Some
bigger.
of the big ones. Okay.
Yeah.
So I oftentimes tell my clients, your lender should be like your priest. Just disclose everything. Just tell them all your sins.
Yeah, for sure, really. Yeah, let us know.
Let it all be out there.
Yeah. And what's good is, and I like that, because for the most part we can overcome many things that come up, but only if we know about them.
Right. Yes.
It's
If
finding
they come
out,
up last minute.
and they always will. People think that you can hide things, but nowadays everything is found. Everything is discovered. They have so many different background and record checking and things like that. There is no secrets. Everything's going to come out.
Okay. Speaking of checking, how often do you have to pull a credit report? So say you checked our credit, we've gotten the pre-approval, or even better, the conditional approval, then do you keep checking it? Say it takes me, 60 days to find a home. Do you have to keep pulling credit every so often? Or?
So a credit report is typically good for 90 days.
Okay.
So as long as everything's done within those 90 days, I don't need to do anything again.
Okay.
Now, there are some loan programs where they will do a last minute soft pull credit check just to make sure you didn't make any large purchases. It doesn't affect the credit score or anything like that. It just wants to make sure you haven't increased your debt.
Okay.
If you did, it's a 10% threshold. If your debt did go up by 10% or more, now we are required to pull a full credit and see what's going on. So typically 90 days, you're good to go.
Okay.
And yeah, there's no need to keep repulling it.
Okay. So yeah, back to keep everything the same.
Keep it the same.
Okay.
Yeah.
Perfect. Okay. Well, lastly, I think the last thing I want to ask you about is what everybody's talking about, right? And they've been talking about rates. Tell me a little bit about rates today, or how are they? How does that all work?
So rates are very volatile. They are a very big component, of course, to what someone can qualify for. But I think so much emphasis is put on it as if it's the only thing that matters. So when I talk to a client, I ask them, hey, what's our goal? What are we trying to do? A lot of times it's rate. Tell me what I want, a low rate. Well, the truth of the matter is, in most cases, that's not really the main thing. It's usually the payment. It's usually the goal to get this house versus this house. So I try to dig a little deeper, because rate is just one of a bigger formula.
Right.
So it just helps us find out what the payment is. Rates are constantly moving around. So I encourage my clients to not get so caught up on the rate, because the rates will always change.
Yeah.
Let's focus in on the other areas that, if you want this house and you wait for the rate to be what you feel is what it needs to be, that doesn't mean the house will be there.
Right.
So get in while you can get it. We can always adjust the rate later. So those things can change.
Yeah.
Another thing, I think what happens many times is people have this idea, I want to wait for a better scenario, right? I want to wait till I save more money. I want to wait till I have better interest rate. I want to wait till my credit's a little bit better. Waiting, I feel, kills deals. And the thing that happens is I try to have people kind of think a little bit outside the box, kind of bigger picture. If rates come down for you, well, then they came down for everybody.
Yes, sure.
If rates come down for everybody, now there's more people who qualify for that property you're interested in. If you have more people who are qualified, now there's a price war.
Yeah.
And now guess what happens? Prices start to go up. So while you waited for a lower rate, the price of the home just went up. What happened? You didn't save anything. In fact, you probably are now paying more.
Right.
So I find that waiting doesn't help. It just makes it actually can make things worse.
Can make it riskier.
Yeah.
Okay.
Definitely.
All right. Good to know. I'm going to look at my notes here, but let's see. I think I have, well, you answered the question. My last question was, should buyers wait? So no, I guess not. It could be risky. Yeah. And that's about it.
Okay. That was quick.
Yeah.
That was
that's
not
all I
as
have
painful
for
as I thought it would be.
I'm glad. I never want it to be painful. I just want us to be able to help our clients. Is there anything out there you'd like to say to a buyer that, is coming to work with you? How does working with you, I mean, I know how it is working with you and your team. So, but tell me about that. Okay. A little bit about what do you bring to the table for a buyer?
So
throw that one in there.
Yeah, that's good. I like it. So I've been in the business for over 20 years. So I've seen pretty much every situation. I look at things when it comes to mortgages and loans and all that. I look at them as a problem that needs to be solved. And so I'm always solution oriented. How do we fix the issue? I don't care what the issue is. Let's just fix it and find that solution. So I pride myself on being able to find those solutions. And then speed, I think, is just so helpful in this market especially, but just in terms of the economy and what happens. No one's guaranteed their job tomorrow. So all these things can happen. So if we can get things done quickly, it avoids issues down the road. So I think that's kind of what I bring to the table. Just, and I think I want to say I don't know, I'm being too overconfident, but I try to simplify things. mortgages can be complicated. I think people do make them complicated.
Sure.
I try to simplify it. I may see and do this every single day,
Right.
but the average client doesn't. So they may be terms that they're not familiar with and things that they're not too sure about. So I try to help explain, educate, so that they go, okay, that makes sense.
Yeah.
Because people are fearful of what they don't know,
Right.
not so much what they do.
Absolutely.
And so once they understand it, it's like, oh, that was not too bad.
Okay. And I would say definitely speed. You've helped me with some deals, solutions. You've saved some of my clients some money and some time.
Yeah.
Yeah. So, and I love that that educational aspect. I know that's one of the things I like to bring to the table as well. So
Yeah.
experience, solutions, timing. I
Yeah.
love it.
And I'll say working with a great agent is key. It helps unite now because now we're working as a team. And Kathy, you're excellent
Definitely.
with communicating
Oh.
to your clients, to myself, and keeping everybody on the same page. So I always appreciate that.
All right. Well, cool. And, we have a seminar coming up together, and I'm really excited about that. We are bringing in an attorney to work in a trust and estate planning seminar. So I look forward to doing that with you in February. Watch out for your invitation from Ernest or I.
Yep.
We'll be inviting some of our followers, some of our clients to come and enjoy that presentation from our attorney.
Yeah, that'll be awesome.
Yeah.
I'm looking forward to it.
Me too. All right.